Hello there. Today, we're pulling back the curtain on something that millions of us in the UK go through every single year, the self-assessment tax return. And with some brilliant insights from the experts over at My Tax Accountant, we're going to explore what really happens to all that information you send off to HMRC. You know that feeling, right? You've spent ages getting all your receipts and invoices together. You've checked all the numbers, probably twice. You hold your breath, you click submit, and then, phew, it's done. But have you ever really stopped to think about what happens next? Does your return just get filed away in some massive digital cabinet? Or does that single click set something much, much bigger in motion?
Well, the reality is, your tax return isn't the end of the story. It's actually the key piece of a giant digital puzzle. It doesn't just sit there on its own. It's instantly connected to a huge network of other data points, all coming together to build a pretty detailed picture of your financial world. It's all part of a seriously smart system that's built to keep the tax system fair for everyone.
So to really get our heads around how this all works, we need to take a look under the bonnet at the technology that's driving everything at HMRC.
Right. Let's talk about the brains of the operation. It's a powerful AI system called Connect. It was originally built to help close the tax gap. That's the difference between the tax that should be paid and what HMRC actually collects. And honestly, Connect has totally changed the game, shifting HMRC from doing random spot checks to launching really targeted data-led investigations. To give you an idea of just how massive this thing is, let's start with a number: 55 billion. Just let that sink in. That's roughly how many separate bits of data HMRC's Connect system holds on us taxpayers. And a data point can be anything: a bank transaction, a house sale, your PAYE salary details, even a tiny bit of interest you earned. It makes it one of the most powerful government databases on the planet. So what is Connect, really? Well, the best way to think about it is as HMRC's very own digital detective. Forget the old days of someone manually going through paperwork. This is a super smart AI that is constantly sifting through those billions of records. And it's not just storing data, it's actively hunting for mismatches, comparing information from all sorts of places, and flagging anything that looks a bit off.
The real magic of Connect is its ability to see connections that a person would never, ever spot. It finds these tiny, hidden patterns in that absolute mountain of data. For example, it could link your declared self-employed income with land registry data showing you've just bought a new property, and then check with your bank data to see that you didn't even use a mortgage. For a human investigator, connecting those dots could take weeks. Connect can flag it in seconds.
Okay, so that leads us to the big question. Where on earth is all this data coming from? Because a system like this is only as good as the information it's fed. And, the sources HMRC uses are probably way more extensive than you think.
Connect is pulling information from all over the place. You've got the obvious ones, of course: your bank, your building society, your credit card companies. They all have to report data. Then there are other government bodies like the land registry for when you buy a house, or the DVLA for car ownership. But, and this is the big bit, its reach goes so much further now. We're talking about data from online marketplaces like Etsy and Airbnb, info from crypto exchanges, and even data that's automatically shared by tax offices in over 100 other countries. And on top of all that, it can even take in tip-offs from the public.
And here's a pro tip for anyone out there with a bit of a side hustle. Since January 2024, brand new rules kicked in that force digital platforms, so think Vinted, Uber, Airbnb, Etsy, you name it, to automatically send data about how much their sellers are making straight to HMRC. This is a huge deal. It means that extra income, which might have been a bit under the radar before, is now completely visible to the taxman. This slide shows you exactly how that works. Let's imagine Aisha, a freelance consultant in London who also sells some amazing crafts on an online marketplace. For every penny she earns on that site during 2025, the platform has to send a full report of her earnings to HMRC by the end of January 2026. So, when Aisha sits down to do her 25-26 tax return, Connect will just automatically check the number she declares against the number the platform has already given them. Any difference is going to get flagged instantly.
And this push for transparency doesn't just stop with good old pounds and pence. For a long time, digital assets like crypto felt like a bit of a wild west for tax authorities. But now HMRC is closing that net, and they're closing it fast. Stay with me here because this next point is absolutely crucial if you're involved in crypto at all. Starting from the 1st of January 2026, a new global standard called CARF, that's the Crypto Asset Reporting Framework, becomes fully effective here in the UK.
This is a massive international agreement that basically forces crypto platforms to collect and report user data directly to tax authorities. For us in the UK, it means crypto exchanges, both here and overseas, will have to give HMRC the full details on your crypto activities. And that's everything: Bitcoin, Ethereum, NFTs, you name it. The idea that your crypto dealings are anonymous from a tax point of view, well, that's officially coming to an end. But the data web doesn't stop at just the official financial stuff. Some of the biggest clues about your finances can actually come from places you'd never expect.
Now, this quote here, this comes directly from HMRC's own rulebook. It confirms that they have the power to observe, monitor, record, and retain internet data that is available to everyone. That last bit is key. They are not hacking your private accounts. They're just looking at information that's already out there in the public domain. That could be your business website, news articles, and yep, your public social media profiles on places like Instagram, Facebook, or LinkedIn.
And this slide is the perfect example of how it all connects. Let's say you've declared an income of £35,000 on your tax return, but then your public Instagram feed is full of photos from first-class flights, fancy holidays, and maybe a snap of a brand new luxury car. The Connect system is built to spot exactly that kind of mismatch. It just asks a very simple question: does the lifestyle we can see publicly line up with the income that's been declared? If there's a big gap, that can absolutely be a trigger for a more formal check.
So, to answer the question on the slide directly, can your public social media posts trigger a tax check? The answer is, without a doubt, yes. Now, it's probably not going to be the only reason, but if your online life suggests the level of wealth that just doesn't add up with your tax return, it can definitely be a big piece of the puzzle that gets your file flagged for a closer look.
And here's another thing that often catches people by surprise. Under specific laws, HMRC is one of the few organizations that can request your Internet Connection Records, or ICRs. Now, let's be really clear what this is. It's not the content of your emails or your full browsing history. It's the metadata, basically a log of which websites or services you connected to and when. It can be another piece of evidence. For instance, they could use it to see if a business claiming it had stopped trading was still logging into its online banking or e-commerce site.
So with all this data pouring in, how does Connect decide who to flag? Well, it's not random at all. The system is programmed to look for very specific patterns and red flags that often point to tax issues. That's not all. Here's where most people go wrong. Let's look at a few of the most common triggers now.
Okay, this first one is just fascinating. It's like something out of a detective show. The system uses a mathematical rule called Benford's law. Basically, it says that in most real-life sets of numbers, like a stack of invoices, the number 1 appears as the first digit about 30% of the time. The number 2 appears about 18% of the time, and so on. But when people just make up numbers, they tend to spread the digits out more evenly. Connect can scan your declared expenses in a split second, and if the numbers don't follow that natural Benford's curve, it flags them as potentially being made up. How clever is that? Connect also does something called dynamic benchmarking. It knows the typical profit margins and costs for pretty much every type of business. So it'll compare your numbers against the average for your industry and even your location. For example, if a restaurant in central London is reporting a profit margin of only 20%, when the system knows the average for that area is more like 65%, that's a massive red flag. It just doesn't look right. And beyond all the clever tech, there are some pretty common sense red flags that can also trigger an investigation. Things like huge unexplained jumps or drops in your income from one year to the next. Claiming expenses that seem way too high for the amount of money you're making is a classic one. If you've got a history of filing late or getting penalties, that can mark you out as higher risk. And as we've already covered, a lifestyle that just doesn't match your income is a big one. Even just having consistently messy or incomplete records can be enough to make them suspicious. Now, I know that hearing all of this might feel a bit, well, daunting, but the idea here isn't to scare you. It's to show you how important it is to understand the system so you can get things right and feel confident about it. So let's switch gears from the risks and talk about how to stay on the right side of all this. First off, it's really important to understand the stakes. This table shows you how far back HMRC can look into your taxes, and it all depends on your behavior. If they find a mistake but agree you took reasonable care, you kept good records and you tried your best, they can only go back 4 years. If they decide a mistake was down to carelessness, maybe sloppy records, that window opens up to 6 years. But, and this is the one to really pay attention to, if they find you deliberately hid income, which is fraud, they can go back a full 20 years. The consequences of getting it wrong can last for a very, very long time. So the main takeaway here isn't about trying to be clever and hide things, because the Connect system is literally designed to make that impossible. The real solution is actually the complete opposite. It's about being diligent, keeping really accurate records, being honest in what you declare, and this is so important, getting expert help when you're not sure about something.
And speaking of expert help, we do have to say that all the information we've shared today is for general guidance. It's here to give you a better understanding of how things work, but it's not a substitute for professional advice that's built around your personal financial situation. Because everyone's tax situation is completely unique, the only way to get real peace of mind is to speak to someone who can give you advice that is tailored specifically to you. That's why talking to a qualified professional is always the best thing to do.
The team at My Tax Accountant, who gave us all the expert insights for today's discussion, are there to provide exactly that kind of professional help. If you need a hand with your tax affairs, you can get in touch with them directly. Their phone number is 0208-570-8531, and the email is info@mytaxaccountant.co.uk.
The world of tax is always changing, so keeping yourself up to date is so important. For more vital updates and expert insights like we've talked about today, make sure you subscribe to the My Tax Accountant channel right here on YouTube. So, we'll leave you with one last question to think about. Now that you know how the system sees you, how it connects all the dots, and what it's looking for, is your tax return telling the complete and accurate story of your financial life? Thanks so much for watching.